Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, and this is the Bollinger W Workshop. Today, I'm going to show you how to trade the Bollinger W strategy. It's a powerful strategy. It's designed to pick reversals. So what we're looking for here is we're looking to grab the bottom of the market and maybe buy in at an opportune time where we can get in on a trend change and bullish price action. Now, it's more advanced. It's a more advanced strategy in that we're going to have some special settings for our indicators, and we're also going to have to be able to identify when a market is tradable and when it isn't. So I'm going to show you how to set this thing up on TradingView and MT5. We're going to go through and look for some live trades in the real market. I mean, I only see a few markets that we could potentially be looking to grab a bottom in. One of them is Great Britain Pound USD. The other one is going to be, it looks like maybe the New Zealand dollar, US dollar. Not necessarily a lot there. Most markets are flat today. It's been decent, I would say. WTI crude oil has been active, up about 2.18% at around 66.88. So we're going to look at that. We may look at that. We may not look at that. I probably won't have enough time to look at WTI today, but it hasn't really been the best thing to trade over the past 4 or 5 days. Gold has been flat. Things have just sort of really settled into what I would call the 4th of July doldrums. And it is make no mistake, the big traders aren't in the markets right now. These markets are thin. We're going to have a big time news event tomorrow that I'm going to sort of preview US NFP, but we've got a big 30 minutes on hand for us today, maybe a little bit longer. So if you have any questions at all, be sure to ask. But I want to get everybody prepped up and ready for NFP Live tomorrow. Remember, join me 10 minutes before the big event, and I think we're going to have some links that we're going to be able to throw out there in the switch markets realm, and then also we should be scheduled also on our How to Trade channel and our Forex Signals TV channel. So if you're out there watching, be on the lookout for that scheduling a little bit later today. Have a little bit of tech things I got to do first. A lot going on, though. That's a fact. A lot going on. We're looking at Big Beautiful Bill. We're waiting for that to be signed probably later this week. That would be my bet, is you're going to get that on July 4th. And then right now we're seeing a big move in Bitcoin. So I'm going to go ahead and recap that. I don't know if you guys remember that 920 bid that we talked about on Bitcoin on the daily. It's working. It's working in a big way. And it looks to me like we're going to blow up and maybe go up and take a look at some of those top side levels that I was talking a lot about lately. All right, so it's good to see everybody. Yes, sir. Always a pleasure. Yes, sir. Claudio Alencar. Good to see you. Claudio. Harry. Always a good day when Shane streams. Thank you. Thank you, Harry. Man, that's awfully nice of you. Glad I managed to catch this one. Well, always welcome. You can always catch us on demand on any of the YouTube channels or in the How to Trade trading room. Dave's Apple. Good to see you, Dave. Tuku. Always a pleasure, guys. Okay, let's go ahead and let's take a look at where to begin. We're going to do the W strategy. I want to break that down, though, in sequence. So let's go ahead and let's cover two things first, and then we're going to get to the W strategy, and I'm going to show you how to trade it. First thing I want to show you is Bitcoin. Bitcoin's absolutely blowing up. It's blowing up today. We're up about 3.68%. If you guys remember yesterday's stream, we talked about this 920 crossover on the daily. And there it is. There was the 920 crossover. So according to the rules of the 920, you'd be looking to bid somewhere right around 107.379. Your stop loss is going to be down here around 96, and you're already up just about $2,300 on the trade. Pretty good trade. Not a bad trade at all. Where would your top side target be? Well, it's got to be at least a 1-to-1 in my book. And if I'm going to risk 96 somewhere down in there, and then I bought 107s, I need to get 10 grand out of this. So I would be looking at the top side, probably at 117 somewhere, something like that. So a lot of folks are going to believe that, hey, that's not necessarily a viable area, or that's a high risk trade, betting that we're going to extend in Bitcoin. There's crypto cutouts in that Big Beautiful Bill. There's some verbiage in there about crypto investment in the United States becoming a major crypto player. I have to tell you, I think that the sky's the limit for Bitcoin. I don't know if you bet your life savings on it from 109 or 110, but I think there's a very good opportunity here by the end. I think it's by the end of the summer. I think it's by Labor Day that we're trading up around $1.25, 125 here. I think it's very, very, very probable that that's the case, but we just got to wait and see, guys. A lot going on there, that's for sure. Good to see you, Ralph H. Good to see you. Always a question. Queen B Roblox. Say that 3 times. Queen B Roblox. Good to see you again. Always a pleasure, Queen. Everybody's always welcome. We have a truly global community here. Everybody's from everywhere. I'm here in a very, very small town up in northern Montana. Actually, southwestern Montana, but the northern United States. And we have people here from every metropolitan area, big metropolitan areas, and also in rural areas from all over the world. So always welcome. Let's see if we can't get into a little bit of a strategy talk talk now right after NFP preview. But this right here, very nice move. There was your bid. There's your stop. I think you got a good chance of hitting your 117 here. I really do. So if you're long Bitcoin, you could be right. You could have timed this thing perfectly. And if you're just playing the 920 to play it, nothing wrong with that either. Nothing wrong with just getting in there and getting after it. Let me see. You want to take a look at silver? Yeah, we'll take a look at some of these things, individual markets after we go over our workshop here. I'm more than happy to take any and all questions towards the end of the stream. I'll show you my approach to some of these markets, but if you have any questions, we'll be sure right there to look at silver too in about 20 minutes or so. All right, guys, NFPs tomorrow morning early. This is what we're expecting. We're expecting non-farm payrolls to come in right around 120,000, down from 139. Remember, the revisions are huge. I'll have all the coverage for you here 10 minutes before the event starts. 8:30 a.m. Eastern. I'll be on at 8:20 a.m., which is 6:20 my time. But don't worry, I love getting up early and covering NFP. It's always a lot of fun. Unemployment rate, 4.3%, is supposed to go up from 4.2. Those are the headliners. Manny Singh, good to see you. Maninder. Man, I'm terrible with names, guys. I just apologize right off the bat, but thank you for joining me. But something like this, 4.3% up over 4.2, that's a headliner. Not only do you have inflation high, but now you've got unemployment clicking up. I got to tell you, the Federal Reserve has two jobs. It has two jobs. It's got a dual mandate. Maximum employment, pricing stability. We don't have pricing stability, and now our unemployment rate's clicking higher. Life's getting a little bit tougher, maybe looking at a recession here in the United States. I don't know. I don't know how they cut. I really don't know how they cut, but they're supposed to cut. We're going to see here in about 33 days. All right. Now, remember, I'm going to go ahead and demo these things on both TradingView and MT5. We're going to get lined up with the Bollinger W strategy right now. If, in fact, you trade on TradingView, and you want to run your trades through MT5 and execute your trades on that Switch Markets MT5 platform, then this is the type of technology you need. This is PineConnector.com. I'm working on some content right now for Pine Connector, free advanced 14-day trial. And essentially what you do is you hook your TradingView, you use your Pine Connector, and you get loaded up on your MT4 and MT5, and you've got a real good system here. Now, I do my analytics on TradingView. And the reason why I do that is because I'm fast at it. I've been doing it for years and years, and I know how to manipulate the charts relatively quickly so we can have a decent presentation. That's why I use TradingView probably 90% of the time on these streams. However, I don't execute my trades on TradingView. I execute my trades through my futures broker. So I have TradingView up to break down the markets and take a look at price action. And then I also am executing trades on a completely separate platform. And what this Pine Connector is going to let you do is it's going to let you do something very similar. You're going to be able to really break down the markets on your TradingView and then execute on your MT4, MT5 platform. So for today, I'm going to go through and I'm going to show you how to put these indicators on TradingView. And then I'm also going to show you how to put them on MT5. And remember, Pine Connector, if you're interested, Pine Connector, you just go here, you go ahead and load up your indicators in your system, and then your alerts and your trades pop up on your MT4, MT5. It's interesting technology, and we're just getting started with this. So we've got a lot of really upside potential there in what I think is going to be a real big game changer for a lot of traders out there that use TradingView but aren't really Switch Markets clients yet. You could definitely be using that connectivity to get in there and get going with it. Let me see. Harry, I hope that lady that left disgusted when the recession was mentioned comes back and apologizes. Yeah, Melinda. I'm waiting on Melinda, Harry. I hope Melinda comes back. Hey, I'm gracious. And maybe, hey, could be right. We might get a positive GDP print, but I'll tell you what, prices are up. Consumption's coming down. Unemployment's going up. We're seeing all the signs right here of a negative Q2. We're seeing all the signs of it. So I think that it's going to be a slight, I don't think it's going to last very long. I mean, the foreign direct investment and the tariff money coming to the United States is huge right now. I don't think that it's going to last very long. But I do think you're going to get a recession. I don't see really any way around it. I would imagine that it's going to happen probably just for a few weeks. All right, guys, if you're not already in the markets, head on over to Switch Markets. They've got all sorts of bonuses and everything you really need to get going in the markets. Okay, so the strategies that we're going to cover today is the Bollinger W strategy. Now, remember, this is inside of the trading room. This is inside of the How to Trade trading room. You just go right to our academy. You click on the little graduation cap, and it brings up these strategies. And there's all kinds of strategies here. A couple of mentors that are no longer with us that have pursued other interests and other opportunities. Nick Quinn's got a couple on there, and then also Connor Woods. Most of you are familiar with Nick and Connor if you've been in here. Well, maybe not so much Nick because he left about over a year ago, but Connor just left a few months ago, so I'm sure that you remember those folks. Check them out. To be honest with you, I'm not an expert in their strategies. We cut these things up. I know the pendulum very well, and I know the W strategy. As far as to the trend rider and the piranha, well, I know the piranha pretty well, but the Japanese noodle strategy, I don't know that one. So you're going to have to figure that one out on your own. So just if you have any questions at all on these strategies, just come on in and ask. Okay, this is the W. So within that academy, you go right there to those trading strategies, click on the W strategy. We've got an 8-minute video that breaks it all down for you. We've also got some other materials. We've got PDFs. You can download these PDFs with a strategy overview, a trading guide, and W trade strategy examples. Now, it is relatively straightforward. It's an easy strategy to learn, and it's a fairly easy strategy to execute. The biggest thing that you're going to have as a challenge with the Bollinger W is understanding exactly what you need to do to get this thing set up and ready to trade. Now, time frame and market are everything. And I'm going to tell you some time frames that I would depend on. We can use it on very short time frames or long time frames, and I'm going to break that down when we start setting it up in the live market. Okay, so if in fact you're interested, the basic construct is this. We're going to set up our Bollinger Bands. We're going to leave our Bollinger Bands at just a base level. We're going to just leave them with their factory settings is what I like to call them, because we're not going to change them. We're not going to do any special settings like I use. We're going to use exactly what Mario Singh used in his book, or exactly what John Bollinger used in his book, Bollinger on Bollinger Bands. This was one of his favorite strategies, and essentially what it is a reversal strategy. So what we're looking for here is once we set up our Bollinger Bands, we're looking for a nice move and a first low that gets established outside of the Bollinger Bands. We're looking for a pullback. We're looking for a second low that's going to be established inside of the lower Bollinger Band, and then we're looking for a big green candle. That's going to be our entry point. We have some options on our stop loss placement, but it really is a pretty nifty strategy, especially if you're looking for a way to choose bottoms, pick intraday bottoms, to pick maybe a long-term investing bottoms. It can be a very, very useful strategy. I know it was a favorite around here a while ago. I haven't done any of these workshops in a while. So there's the Bollinger W, and the reason why they call it the W, because it looks like a capital letter W. That's what it looks like. We're looking for an initial bearish move. The bottom of the first part of the W is outside of the band. There's your pullback. The second low is inside of that lower Bollinger Band, and then we're looking for a large bullish candle. We're going to buy on the close, and we're going to pick up the reversal. It's that easy. It's not that hard, guys. So essentially, this is what a successful Bollinger W trade would look like. You would see right here, you have a nice move. You have a break outside of the lower Bollinger Band. Then you have a pullback, the second low, bang, and then what? Your big green candle, and you're looking to get in on a trade that potentially these trades can be big winners. Are they high risk? I don't know. I think high risk is all about the size you use with respect to how much money you have. But I do believe that the Bollinger W can help you pick intraday lows. And if, in fact, you get in on them in the right time, you can make a lot of money trading with this thing. So it's interesting. Remember, 1% to 3%. Risk management, 1% to 3% on any given trade. I'll let you trade 5%. Just don't tell anybody. But I think that going any higher than 5% is a big-time risk. All right, let's get it set up on TradingView first and then MT5. So the first thing you're going to do on TradingView is you're going to go up and hit the indicators button, and then you're going to go down and add Bollinger Bands. So go ahead and give Bollinger Bands a click. And we're going to, I already have my factory settings in, or excuse me, these are sort of on default. But let's go ahead and just move these back to the default. So if we were looking for maybe a default setting, we would go ahead and just reset the settings, and you can see now you've got your Bollinger Bands the way that they came right out of the package. So think of it as if you buy a big new TV or something, it's the factory settings. It's all it's all your saturation, your color, your tint, your brightness, all of that. Essentially, that's what you're looking for here out of the Bollinger Bands. We're going to go with a length of 20. We're going to just use an SMA. We're going to go based on the close, and the standard deviation is 2. That's what we're looking to do here. We just want the factory settings. Now, on MT5, how do you do that? Relatively straightforward, guys. You go right up here to insert. You're going to go to indicators. You're going to go to trend. Okay, that's where our moving averages are typically. The Bollinger Bands sort of are a function of a moving average. You're going to go ahead and click on them. You've got a periodicity of 20, deviations of 2, a standard deviation of 2. Apply to the bar close, and there you go. Let's go ahead and put it on and see what we've got. So there's your Bollinger Bands. Okay. Now, I'm going to go ahead and transfer back to Trading View just because I can work it a little bit better and sort of show you exactly the concepts we need to understand before we place one of these trades. All right, here we go. Now, when we're talking W, the first thing we need is a bearish move in the market. No question about it. We have that out of the Great Britain Pound USD today. We have that 30-minute chart. There's a nice big run there. What do you have there? Well, you've got your first low. So this would be the first part of your W. Now, unfortunately, it doesn't really look like this market wants to pull back with us. Meaning it hasn't formed the second low just yet. Now you need the second low. Now remember, the second low has to be inside of the Bollinger Bands because it can be lower than the first low. It could be down in here somewhere, but it has to be inside of that lower Bollinger Band. And the reason why is when it's inside of that lower Bollinger Band, you understand that the relative nature, the price action's dying down, the momentum's dying down, and you're looking to get in on that reversal, on that bullish reversal. So for here, we've already got a pullback in motion. We would be looking for our W. Let's just go ahead and go right here. This would be sort of our first leg of the W. This would be our second leg, and we just haven't quite got our pullback yet. So what we need now is this to sort of fizzle, and then we need to sort of see the development of our third leg down, our second bottom, and then we're going to go ahead and we're going to look to get long if, in fact, the market shows us that's what to do. So that's a decent look. It's sort of projecting when a Bollinger W could be in play. 30-minute chart, I would be watching this Great Britain Pound USD probably up until I would say the Asian Open, the Tokyo Open. I think that if you do get a pullback from there, you'll have a chance maybe to buy and grab a reversal. Now, one of the great things about this is you can take it right down to lower time frames. No question about it. So here's our big move on the 5-minute, okay? Now, theoretically, we'd be looking for our first low. Yeah, probably right there. Did you get a pullback? Somewhere in there we could say that's a pullback. The problem is you didn't get the second low, and that's a challenge. That's a real challenge for you. How about right here? Could you say that this would be a first low, and this is your pullback, and maybe this is your second low, big green candle? You could do something like that. Just remember, you're fighting a trend on a 5-minute chart. That could be problematic. Personally, I don't like the market structure at all. It's more of an L. It's not really a W. So you could have maybe taken this trade right there. It could have been your first low. This pullback right to here, maybe. Where's our low here? Potentially there. Big green candles where? Right there. You could have bought there. Where would your stop loss have been? Would have been right beneath that second low, which is sort of the ultimate low of the W. So your idea would have been to sort of go long, trying to pick up on the bullish momentum. The real question is what happened to our trade? Well, we got knocked out of the box. Right there, we're long. We came back down and knocked us out. Now, one of the beautiful things is it didn't cost us very much. What it cost us 23 pips, something like that, 25 pips. And as long as we're dialed in 1 to 5%, you're all right. You didn't lose the ranch on that trade, and it is a 5-minute chart. That's tough. That's sort of a tough type of a thing to trade because you're in a real short time frame and you're going against a stiff trend. So you want to be very, very careful there when you're fighting trends. But that essentially is the idea. Now, let's see if we can actually find a legitimate market to trade right now. Unfortunately, we're not seeing much in the way of markets that are down. Let's take a look at a futures market. Let's go right to the YM. This is going to be the E-mini Dow on potentially the 5-minute chart. This would have been another close call. You can see right there, there's a move. There would be your first low, your pullback. The problem is the second low is beneath the second or the lower Bollinger Band, so you wouldn't have got in on that move. It's unfortunate. Right here, not really coming our way. Sort of flattened out. We need something with bearish action. So we're looking right now. Let's go right to the Kiwi. Let's go to the NZD USD. Did we have anything earlier today? Potentially right in here, maybe. One, boom, there's your pullback. The problem is the second bottom isn't outside of the lower Bollinger Band. That could have been tough. Potentially you could have done something like this, though. Maybe there, right there, you're outside of the band. There could have been your first low. This is just a 5-minute chart too, guys. This is intraday trading on a Forex. Not necessarily the easiest thing to do. There's your pullback. Do we have a second low? There's your second low. So what are you looking to do? You're looking to buy. What do you need to buy? Big green candle. Right there. That would have been your bid. Did you get stopped out here? Potentially, if you have two options on your stop losses. The first option is going to be beneath the second low. Personally, I like putting it beneath the lower extreme, padding it a few pips beneath the lower extreme of the entire W. If in fact you got that trade and you aligned it correctly, you made a lot of money. 60.83, 60.59, that's a pretty good intraday move for the Kiwi. Not too shabby. You've only been in the market probably, 2 hours, something like that. So that's the basic idea of the W. It's about getting the bottom of a market. So let's see. What else? I mean, from a practical perspective, can you get away with trading a 5-minute chart on the Forex? Maybe during the U.S.-London overlap. Trading one of the majors, just because there's enough volume there to move the market. But what else could we do with this type of strategy? We can easily adapt it to be a swing trading strategy. Now, originally, this Bollinger W was intended by John Bollinger to be an investment, not necessarily an investment type of a strategy, but definitely a swing trading type of a strategy for stocks. And what he was looking for was big moves, maybe another leg down, and then price exhaustion, and then the opportunity to get in on a stock play long. Well, we can and can't do things like that with our derivatives contracts, depending on rollover fees, swap fees, and things. But you can definitely apply this to stocks. And the way that Bollinger was doing it was on a daily chart and trying to pick winners using this type of strategy. The idea that the one low and then you have another low that may be lower, but still it's relatively tame when compared to that lower Bollinger Band. Like I said, this is a more advanced strategy. It's more difficult than some, but still fairly intuitive. I mean, check out the video and the PDFs, and you can definitely find these trades pretty much all day long if, in fact, you're interested, so inclined. Let's go to the U.S. dollar, Canadian dollar. See, now for me, I love the 4-hour chart. I've always been a big fan of the 4-hour chart for the Forex. Just remember, if you're going to use something like this, a Bollinger W, on, say, this type of strategy, you're going to be swing trading. You're not going to be scalping or intraday trading. So something like this, you could have said, all right, there's your first bottom, there's your pullback, there's your second bottom. This is a good example of a trade that, that really did save you. The rules saved you. So there's your first leg of your W. It does not matter how high the pullback goes. So something like this, it's still a legal W. Maybe it's not as good as other Ws. Then what? So that would have been your second low right there. It's just barely inside of that lower Bollinger Band. So theoretically, that could have been a trade, except for what? You don't get the big green bar. You don't get the big green bar. Look, doji, red bar takes out that second low. That's a non-trade. What you needed right there was a little bit of maybe some compression, and even the third or fourth bar, we could have easily entered on these entries. The problem is that we traded below that second low. And when you trade beneath that second low, you run into trouble because why? You don't have a W anymore. You don't have a valid W. Now, maybe if you wanted to extend your second low out to something like this, which I think is questionable, it's an aggressive W, then what could you have done? You could have bought right there. You might have got a little bit of a pop up to 136.60 from 136.26. Pretty good move. Stop loss should have been right down in here, right beneath that low. But still, I mean, that's sort of a questionable W. Is it a legal W? I would say yeah, but I don't like it. And the reason why is you've got that huge move there. That sort of throws off our pullback. And then also this right here touching the lower Bollinger Band and then trading beneath this low, but yet staying inside. It's a borderline W. I don't think it's that great. Something to think about there. So, all right, guys, that's really just a good look at the Bollinger W. I highly recommend, if you're interested in this strategy, to go check the video out inside the How to Trade trading room. Take a look at the PDFs, all the materials there that can help you get up and running with this strategy. It's a good one for picking bottoms. So, unfortunately, I'm looking at the market right now today, and I don't see much selling off. And of course, I would schedule this ahead of time, and we wouldn't we wouldn't be able to find markets that are selling off other than that Great Britain pound USD. We can go ahead and take a look at that one again, I suppose, to see if we're going to get any love at all. You can see on the 4-hour chart, you've got a perfect W setting up. The real question is how does this work from here? And we don't know. With NFP coming, we don't know. But there's a 1, and there's your outside. There's your first low. Now you're looking for a pullback, a second low, and then you're looking for a way to get long. That can be a challenge, especially with the key events that we have coming our way. Carlo, good to see you, Carlo. Welcome. Let me see, Harry. Would you use volume as an extra confluence with this strategy? No apologies. This is something that I was asked last week to cover the W, and it is one that's a little bit more advanced. It's not nearly as simple as the EMA stuff that we do on here. But to answer your question, volume, typically if you're going to win one of these trades and get in on the right side of it, you know you're going to have bigger volumes here on your sell-off, as you can see we have. And then probably what's going to happen is on the pullback, you're going to see lower volumes, and then volume's probably going to pick up on your second one, on your second low, and then volume's going to drop off, and then you're going to want to get in on a spike of volume to the bull. That's going to give you an opportunity maybe to pick a bottom. Remember, volume's everything. Without volume, there's nothing to move price. There's no participation. The process of price discovery drops, it just becomes moot. There is no price discovery. You've got to have buyers and you've got to have sellers. If you don't have buyers and sellers, you don't have price discovery. And if you don't have price discovery, it's impossible to have volatility. We need volatility to trade, and you've got to have volume. So I would say, Harry, if you were watching volumes and you were sort of sophisticated in understanding what high volume versus low volume is, given a particular market or asset, I would definitely say that volume is an invaluable thing that you could have in your tool belt. That's for sure. Let me see, Ralph H. What's the best time frame for the W? The best time frame, in my opinion, I would be hawking this 30-minute chart. I really like the 30-minute chart on pretty much everything. Especially these Forex pairs during this right here is really sort of during the guts of that U.S. overlap. I mean, we start a little bit early here, but still good volume. So I would say 30-minute chart is a pretty good place to begin. If you want to be a swing trader with this, you can go to a 4-hour and a daily. Just remember, your stop loss is going to be a little bit further down the queue, and you're going to be looking to get in on more, I guess, broader trends. There's nothing wrong with using those longer time frames. It just could get expensive relatively quickly. Something like this, I mean, when you take a look at extremely volatile assets, something like this E-mini NASDAQ, then you could go down to a 5-minute chart and get W's all day. So like right here, this would be a really frustrating thing because you're coming around right there. There's going to be sort of your about a little bit before the open, but you've got a nice big move and you've got a couple opportunities to establish that first low, and then your pullback, you just don't really get it. You know what I mean? You just don't really get it. Like this right here, I could make the argument that this is the W, but it's not really. And the reason why is this pullback, you didn't really see that second low established. You could say it's established right here and then buy right there. I don't like doing things like this because the idea is that I'm just reverse engineering the market and trying to manufacture a winner to show that this thing works. It does work, but you've got to get better W's than that. I would really suggest sticking to Bollinger's. His favorite kind of W, the guy that created the strategy, was something that looks like this. Nice pullback. That second low is still inside of that lower Bollinger Band. That is the qualifier, but it's also lower than that first low. That's the kind of W that he really liked. He called that a premium W. So the idea is that, okay, we have a first low established, good pullback, second low, and it's even lower than the first low. So the idea is that, yeah, the sellers are done and we can get in on a true reversal. But absolutely a great point, Ralph. Time frames. If you want to go down to a 5-minute, make sure whatever your trading's volatile, you're going to get more than likely into trouble trading real short time frames on Forex pairs that don't move a whole lot. I like the 4-hour and the 30-minute for those pairs. But if you want to get down to a 5-minute, you can. Just watch your risk and remember that your success rate's not going to be as great as it will be on those larger time frames. Of course, your risk won't be as great either. Something to think about there. Okay, guys, I'm going to go ahead and run through a few market reads. If you have any markets you'd like me to look at, go ahead and throw them in the live chat, and I'm more than happy to do them. So XAG USD, I'm guessing that we're sort of looking at silver. Silver, it's one of those where I hear a lot about silver. I hear a lot of folks on TV and on radio, and they're all trying to sell me silver, and it's all fine and dandy. The problem with silver traditionally has been it's been an incredibly manipulated market. There's absolutely no question about it. When it comes to silver, it doesn't move like gold. Yes, it has an upside trajectory. Yes, it's a safe haven. Yes, it has a tremendous number of industrial applications. They say, silver's just a big time conductor. It's used in everything from Tomahawk missiles to AI platforms. So there's a case to be made that silver is going to be sort of the next gold. I don't know that I necessarily believe that. I think that it's one of the most manipulated markets in the world, meaning institutional money could definitely put lids on this market, and I've seen that repeatedly over the course of my trading career. Now, something like this is interesting to me. I'm always looking for monthly charts. I'm always looking for really an edge, a long-term anchor point to base my ideas off of. This one, 33.82, of course, that would be fantastic. We're just not going there. So one thing I want to do on this monthly before we move any further is really try to figure out where price is with respect to history. And we're starting to get into that range. 2012. This right here was the heart of the global financial crisis of 2008 to 2012. Major liquidity concerns, TARP 1, 2, and 3, government bailouts for banks. The banks really, don't get me started on it. Don't get me started on the subprime crisis or they say it was a crisis. It was manufactured the whole way, no question about it. But something like this really shows you what silver can do when, in fact, it's bid aggressively during times of crisis. So your high right up there is about 49.81. We're trading 36. There's a lot of people that believe that, we're going like to 80, 49, 80, 50, 70, 75, 90. For me, I would just take a real good look at the history of silver right now. That's 1980. Okay, we're in our Wayback Machine there. I was born in 79. That was before most of you. What was happening back then? S&L crisis, stagflation, huge economic problems in 1980, late 70s, 1980. A lot of it stemmed from the early 70s, Yom Kippur War, the United States coming off of the gold standard, really tumult in the energy markets, and also the U.S. savings and loans crisis was right in there as well. So that we saw, we saw silver fly up. We saw silver fly way up the queue, right up to your 39, 40, somewhere right in there, 47. And you saw a test of that zone in the next big financial crisis, which was in 2008 to 2011. So what's happening now? Well, there's no question about it. Silver's been going to run at these highs. The only real thing that we're wondering about is when does it challenge 50 or 49 or something like that. This time around, there's a lot of fundamentals that point to the top side of silver. AI, like I said, AI consumption is a big one. We're looking for any kind of conductors that can go into these data centers and make AI actually AI. You're going to need a lot of silver. You're going to need a lot of copper. You're going to need a lot of everything. So that's going to be a bullish market driver for silver as well. Now, it's also an inflation hedge. When we do see big inflation, there's no arguing with silver. Just even back in 2022, you were trading at 17. We're already up $20 from there. The question is how high do we go? I outlined this level a while back. This 30 zone is being huge, and then we outlined 35. Well, we're on the top side of 35 now. So if I'm in the silver market, I do want to buy it. I don't want to buy it from here, though. I don't think that we have to be that aggressive. I would be surprised if price just shoots up to 40 or 38. You'll notice I don't really do the big round numbers and the key levels with silver. We did 35 and it was successful, but this is a different animal, guys. Silver does not reflect the movement of gold. It just doesn't. So something like this on a weekly, this could be useful to us. Let's go right here. Spike low is what I'd be working off of, that swing low. And then right there, that spike high, and you can see exactly what happened. You pulled back. Your low right there was about 35.28. 35 and a quarter bids were absolutely gold, even though they're silver and gold. Point is this, no pun or alliteration intended. Look at that pullback and then a nice big move. For me, this is a textbook P formation. I haven't really covered the P lately because we've been doing so much with the moving averages and things, but that's a P formation. Looks like a capital P. That's bullish price action. A bullish bias is warranted. I want to be on the long side as opposed to the short, but I'm also not stupid. I have to know, okay, if I want to buy this, where would be a great place to buy it? If I'm careful, 35 and a quarter again would be great. I would take that trade. I wouldn't even think twice about it. Now, can we get more aggressive right now? Daily chart. Should I be trading this thing using Fibonacci's on the daily? No way. No way. And the reason why is there's too many spike highs and lows. Look at what spike high, spike low, spike low, spike high, spike low, spike high. That's what I call a picket fence or a barcode. You don't want to get involved in that. That means that the market's chopping up one day and it's down the next, and it's chopping up one day and it's down the next. A lot of people believe that is a sign of manipulation. I'm not going to throw the flag on that just yet. I think that what we have is just a major area of indecision where, do we buy silver? Do we buy gold? Do we load up on precious metals? Well, the jury's still out. I mean, nobody's doing anything in the gold markets this week. Not really, not compared to what we've been seeing. So I would slow down with silver. I wouldn't dive into it just to dive into it. However, I do want to be on the long side of it. This would be a really hard trade to get. Especially with this swing high, probably not going to hold up. But you could go right off of this swing low here and maybe just adjust your Fibonacci's accordingly and try to go with a little bit of a short-term scalp. I don't know, guys. I think that silver for me, I would be waiting a little bit. Maybe if we press the top of this market somewhere up there, right around 37 and a quarter, we could build maybe a short. Maybe we could go short there for a scalp. But for right this minute, this market is very difficult, and I'm very hesitant to give any market read on it aside from that weekly level. If you do see a pullback on NFP tomorrow, and you may, there will be action in silver. There's going to be action in everything. But if, in fact, you do get that pullback zone right down to around 35 and a quarter-ish, yeah, I can probably sign off on that trade. That's a big-time level. That's a big-time zone and one that we're watching. P formation, bullish bias is warranted. I definitely want to be on the long side as opposed to the short side. But I think with this kind of compression over the last month, might be better just to stay out and wait for us to break, wait for something to happen, either a big-time pullback or a big move up over 37. Something to think about there. All right, everybody, I'm going to go ahead and sign off here for a few hours. It's going to be an early morning, so I'm going to be back in about 18 hours. Let me see. Yes, sir. Okay, yes, sir. I'll do the U.S. dollar, Japanese yen, and that'll be the last one. Harry, thanks for your realistic and honest approach when discussing strategies. I don't know how this channel hasn't blown up compared to the others on YouTube. This is real trading. Well, thank you, Harry. I sure appreciate it. YouTube's YouTube. Go out there and look at some of the folks that are doing live streams that are gurus. I don't claim to be a guru. I really don't. I know today I made one trade. I sold a daily moving average in WTI. We can go ahead and show it to you. 3 contracts. I made $210. That's how I do it. I haven't made many trades in the last week. But it's a realistic way to trade. So for me, I would go to something like a daily moving average. Where was it? 66, 66. It was lower than that at the time. I think I sold 60s. It was somewhere down in here, 63. Moving averages, remember, they do move as the day goes on. But this was my entry with 66.60. Let's just go ahead and take this down to, say, a 1-minute chart. And I'll sort of scope you out and show you my trade. There it was. First shot at it was right about 9:56 a.m. my time, which is about 1. But you take a look at something like this. That was the trade. So I sold 60. Price blew up against me to 70, so I took a $300 draw, and then bang, we got the big retracement, which is exactly what I was expecting off a daily moving average. Pretty good stuff. Took the money, walked out. Didn't feel real great about the liquidity in there. The volumes, if you notice the volumes, we're getting caught in just these what I call sweeps. You get a big move, you get these big 1-minute sweeps right there. That's about almost 2,000 contracts that moved in a minute, and then you had another big flurry, and then as soon as volume dropped, we knew our indicators, our moving average was money in the bank. So as soon as you watch the volume come down from those huge levels, then you said, yeah, we got a real good chance to win that one. And that's exactly what happened. So like one trade today, I'm not overly pleased at all with the gold market. It's been just dead as fried chicken. It's just flat. Absolutely flat, but that was my one trade today. I probably could have hit that for a secondary shot and made a few more bucks on it, and then maybe even a tertiary shot and grabbed a real quick 5-tick scalp or something like that. But I just am not real confident. I'm not real comfortable at all with the liquidity this week. So typically when you're going to see things like moving averages work or Fibonacci's work or really perform, you're going to need to have those big, deep markets, and the volatility needs to be there. And today, yeah, sure, we have volatility. I mean, crude oil's up, 2.5%, which is it's a heck of a day for WTI crude, up around $67, and I understand that, and that's all fine and dandy. But when you don't have the consistent volume, I mean, take a look at these volumes, these 1 minute volumes. We go from 158 contracts, 159 contracts, and then we jump up. We jump up to 968 or 2,000. That's a challenge. Doesn't matter how good our approach is, doesn't matter how smart we are or how good anything we do or how sound our methodology is or good our indicators are. If the volume knocks you out, you're in trouble. And so you've got to, in some respects, you do need to get good at reading volumes, but that's really a difficult thing, and it's a long conversation that probably needs to be, it needs to be probably I don't know, it's probably just got to be its own unit. I mean, its own academy unit. All right, let's go ahead and take a look here and see what we've got here on the U.S. dollar, Japanese yen. All right, there's your weekly chart. You can see we got a set of monthly Fibonacci's up there. Really a beautiful wave. Spike high right there, spike low. Got a little dicey up there right around 147, but we had that on the board as a sell forever. Your high right there last month was 148, and you really just absolutely cratered since we fell at 147. So for me, I would definitely be looking to sell 147 again. I think that would be pretty good, but there's a couple of other things you need to be aware of here if, in fact, you're trading this dollar yen. The first thing is nice big bullish month and then a retracement and then an inside month. That is a doji, but it's kind of a long-legged doji. I would call that an inverted hammer. Inverted hammers typically are reversal signals or continuation, meaning you would see this as a reversal at the top of an uptrend, but off of a pullback going with the prevalent bearish trend. It's probably a continuation pattern. So you need to be aware of last month's low. You need to be aware of that. You don't want to end up long beneath last month's low, at least not in the short term, or else you could really take some heat. Right there, your low is going to be 142.37, something like that, and you just don't exactly be very careful. You don't want to be buying 5-minute charts right beneath that low as soon as it's penetrated. You don't want that. However, 147-ish, I would sell that all day, especially if we got it on NFP. All right, so even looking at a monthly chart, we know that the action has definitely slowed down in the dollar yen. I mean, we're moving sideways now. We've got an inside month. Now we're just sort of chopping sideways. Let's take this down to a daily chart and see if there's anything going on right now. Yeah, there's a little bit of something here. You could probably look to sell. Spike high right there, 148 even, 148.03, something like that. You could do something like that low, 142.68. So it's a nice big range. It's a big baggy range. I like it. That's a pretty good range to sink our teeth into an attack. The real question is do we get an opportunity at 144.71? That would be my sell. The other thing I would definitely recommend is your EMA, 13-period EMAs at 144.50 and the Bollinger midpoints at 144.54. So you got a decision to make. Do I want to be aggressive? You could be aggressive and just short right there at 144.50-ish, or you could maybe wait for a little bit more bullish price action and short from 144.71. I think that's probably what you want to do here. The Japanese yen is not strong, but the U.S. dollar is extremely weak. It's definitely at the back of the line when it comes to the majors, in my view, right now. So I would be looking maybe to take this to one to the short, but I've got to see that. I've got to see disequilibrium of pricing. We've got to see this thing break and get into that area where we say, okay, price is a little bit out of whack, and we're going to have an opportunity to trade it. 144.71 gives you that. NFP tomorrow, I know we're about 100 pips off of that. We could make that up easily on NFP. Be ready. Big time jobs report. We start bright and early. Okay, guys. I'm going to go ahead and let me see. One last question. John Ferretti, good to meet you, John. How did you make that decision so quickly like that, especially on the 1 minute? Yeah. Well, if you're talking about the crude oil trade, it wasn't a... Well, I mean, I had the decision really made. So I've got my macro level right there, okay? And that's what I'm talking about by anchor points. I've got my macro level, and I knew for a long time, right there. I mean, realistically, I knew back in here that I wanted the trade right after the traditional NYMEX Open was about 9 a.m. Eastern. So right here, I'm game planning. I'm saying, listen, if I get a shot at my level, which was at the time it was 66, 63, but I always shade by 3 pips because I want to get in. I don't want to miss the trade. And I even knew down here, I started saying, well, I mean, I still want to sell it. But at this point, about 8:30, I didn't think I was going to get the trade. I was like, they're not going to trade up from here. And then what happened? Volume comes in, they sweep crude higher. Then what do you got? Then you got an opportunity to sell. For me, the question became, how long do I sit and let this thing develop? Typically for me, when I got a big anchor level like that, something like a daily moving average, I'm going to give it a minute or maybe 2. And I know that sounds scientific, really. I mean, but you got to give these things some time to pan out. Now, had I originally just went up there and got hit and it came back against me, or it came in my favor like 5 ticks, I would have just taken it. Especially if I didn't take any draw at all and it was a flash, I would have just said, okay, 3 contracts, 5 ticks, that's $150. I would have racked them and moved on to the next trade. That's what I would have done. Now, this trade was a little bit different because it did blow up in my face. The volumes blew up. And I said, okay, I don't believe that the market's going to trade higher right now. My moving average isn't magic. I mean, it's not. I mean, if there's enough volume there, it won't work. But could we sustain these volumes in this market condition? I bet no. I said, let's give this a minute. So what happened? Volumes dropped off. We traded down and got out of the market and took some money out of the trade. So to make the decision to take the trade, that was no problem at all. I had that. I mean, I'd been watching that for hours, and I knew if I get that, I'm going to take it. So it wasn't like I was sitting here each 1 minute adjusting my levels and things. That's why I don't trade 1 minute charts. I manage trades using them, but I don't look at them and say, okay, this is how we're going to trade this, because it's really hard to do. But this anchor point, my moving average, I knew it had a pretty good chance of succeeding. However, if it didn't work, and essentially what had happened here is we ran up to 70, and then we came right back down, and we started bouncing off of that 60 zone. And I said, listen, we're going to give this thing another minute or so. As long as it doesn't blow up against me, I'm going to stay in there. But if we had hit 60 and it sort of spiked up against me again, I would have ripped the Band-Aid off and taken the loss, because odds are that zone that should have been resistance turned into support. Can't have that. That means that I was wrong and I had to get out. This turned out to be beautiful. Now, is that tight? It's extremely tight. That's scalping. That's tick scalping for me. You don't want to sit there and do that for 15 hours a day. It'll make you tired. Absolutely, John. You're welcome. All right, everybody, I'm going to go ahead and kick off. We'll be back here in 18 hours, 32 minutes, and 51 seconds with NFP Live. It's always bright and early for me, so I'll be getting out of bed at about, a quarter to probably 4:30 or so, something like that, the mountain time. So I'll get up. I'll have something prepped up. We'll be looking at key levels, and we'll also look to scalp. We're probably going to scalp using the 9 EMA with RSI. I like that one. That one's easy. But we'll also have our 920 EMA crossovers, and then, of course, maybe some Fibonacci trades. No orbs because we're going to be before the U.S. Open, but we're going to break this number down. We're going to talk revisions. We're going to talk what it actually means to the markets. All right, everybody, I'm going to go ahead and sign off. Thank you for all the questions today. Thanks for joining us. We're going to go ahead and get ready for NFP. Be ready. Be careful, though, during this overnight. The market, the liquidity is not there, and this is a big number that's coming out, and it could send us directional. Jonathan Ross, good to see you, John. Welcome. Got a couple Johns in there, Jonathan, and oil rallying nice to the upside. Yeah, pretty good move. I'm going to take a look at my top range numbers here with WTI. Maybe I'll get one more trade. We've got about another 32 minutes of good trade. Absolutely, Tuku, you're 100% welcome. All right, everybody, that's a wrap. Trade the action well, and we'll talk soon. See you.